Hey Richmond, Virginia, do you want to know what's going on in the housing market? We'll cover that today on your June 2022 housing market update. What is going on, party people? Hope you are doing well whatever time you are watching this. My name is Elliott with the Elliott Real Estate Team, and today we're going to be hitting your June 2022 market update. I'll start off by saying there's an old saying that goes, headlines do more to terrify than they do to clarify. So today what we're going to do in our housing market update, we're going to cover some of the headlines that you're probably seeing in the news, you're hearing in conversations, you're seeing online, and we're just going to kind of give you some of the facts surrounding those headlines. So before we do that, if I may, if you find value out of this content at some point, would you smash that bell and hit the like and subscribe button? And make sure that you stay to the end of this. We're going to give you some tips for whether you're a buyer or a seller, how to prosper in this market. So let's jump right into it. Number one, or topic number one, are we in a housing market correction? So I will say that we are starting to see the real estate market soften just a little bit, but are we in a housing correction? I think first and foremost, we need to give you the definition of a correction. So according to Investopedia, a correction in any market, be it the stock market or the housing market, is where the price of the asset class drops 10% or greater. Now, not only have we not seen that in Metro Richmond or on a national scale, we are not projected to see that, as home price values forecast are valued that we're going to see about 9% appreciation in the year of 2022. So not only have we seen appreciation throughout this year so far, we are scheduled to see home price appreciation throughout the remainder of the year. So are we in a correction? I have to say empirically, no, we are not in a correction. So you might be asking yourself, but what about mortgage rates? Chris, I've heard mortgage rates are really slowing down the market. I've heard that's a big sticker. I've heard that's a big problem right now. So mortgage rates are absolutely having an impact on the real estate market. Like I said, we've seen where the market has begun to soften. And they're definitely a factor. So we saw a sharp rise in interest rates at the beginning of the year, but it seems like the rates have somewhat plateaued in the last 2 months, as you could see in the graphic over my shoulder right here. I have to say though, context is everything. Now, while rates may be higher right now than maybe what we've seen in the last decade, realize that rates are on the lower end of the scale for what we've seen over the last 50 years. So if we look at rates average throughout these decades, as you can see in the graphic over my shoulder, you will see that we are still on the lower end of what mortgage rates historically have been. Next is the R word, recession. So a lot of people are talking about a recession. We're arguably already in a recession. So that leaves a lot of people asking, yeah, but if we go into a recession, doesn't that naturally affect the housing market? So keep in mind that a recession does not necessarily mean a drop in home values. So if you look at the graphic over my shoulder, you will see in the last 6 recessions that we've experienced in this economy, and only 2 of those did we see where home values actually dropped. Obviously the more milder one, home values dropped about 2%. In 2008, obviously that was the big whopper where we experienced close to about 20% drop in home values. Keep in mind though that the housing market is what actually got us into the last recession, and that was a housing-centric problem. Much different environment. We had a lot of bad loan products. We had people taking money out that had no business getting loans. And a lot of overbuilding, a much different environment that we're seeing today, where loan standards have been tightened up pretty good, and we're actually seeing an undersupply of inventory, which has been one of the greatest factors fueling this run up in prices that we've seen over the last couple of years. So you might be asking yourself, yeah, but Chris, are we not seeing any effects of any of this in the Metro Richmond market? So like I started off with this video, we are starting to see where the market is softening. What I'm experiencing in my personal business is we're not necessarily seeing where prices are coming down, but we are seeing where prices have plateaued. But I wanted to share some stats with you from our most recent numbers. So we now have the numbers in for the month of May of 2022 for Metro Richmond. So as you can see, the median sales price continued to climb. We're actually up to a median sales price of $375,000 in Metro Richmond. Pending home sales, homes going under contract, that continued to climb through the month of May. The days on the market is up, so it's taking longer for homes to sell. We went from an average days on market from 5 days to 6 days. So we are still under 1 week as far as the average time it's taking for a home to hit the market and go under contract. So virtually unaffected. And month supply of inventory stayed at 0.7 months supply of inventory. Keep in mind, 6 months supply of inventory is considered a a balanced market. Anything below that is a seller's market. We're hovering at about 0.7 months supply of inventory, which means that we would literally have to see the market soften 850% to even get into a balanced market. So we're still very much in a seller's market. So what does this all mean for you? For my seller clients, realize that it is still a great time to sell. Like I just shared with you, the market would literally have to soften 850% for us even to get to a balanced market. So we're going from an extreme seller's market to very much a seller's market, if that makes sense. Secondly, your representation matters. So we were in and I would argue that it always mattered, but we were in a market there for a while where it really didn't matter who listed your property. Your home was still going to sell. You're still going to do well just because inventory was so scarce. We are heading into a market where buyers are really considering their purchases just because their cost of their financing is much higher. So realize if you don't have a good agent on your side working on your behalf, you may not do as well as maybe that you've heard your friends and family have done with their real estate sales over the last 14 months. And last but not least, marketing matters. So arguably marketing has always mattered, but we are heading into a market where marketing matters again. The level and the quality of the marketing, how you are presenting your home to the general public is absolutely going to matter. Could be the difference whether or not you actually sell your home or you don't, and definitely is going to be the difference in how much you're able to sell your home for. And then for our buyer clients, number one, I will say that there is no indication that prices are coming down. As I shared with you at the beginning of the video, we are scheduled to see about 9% appreciation throughout 2022. So all the experts are agreeing that we're going to continue to see price appreciation throughout the rest of the year, maybe at a slower rate. But if you're somebody that's been sidelining yourselves, or you just said, hey, I'm going to wait till the market crashes, there's no real evidence that that's going to happen right now. Secondly, realize that we're still very much in a competitive market. So it may not be as competitive as we were, 2 months ago, but in the grand scheme of things, we're still in a competitive market. And we're still seeing where hot listings in good areas or very desirable properties are still selling with multiple offers. Pretty much all my listings are still selling at asking price or above. So realize maybe it's not as crazy as it was before, but it's still very much a seller's market. And last but not least, realize that the interest rate on a rental property is still 100%. What do I mean by that? So a lot of buyers are kicking themselves if they didn't buy when they, a couple months ago, or hey, rates are higher now and it's much more expensive to own a home. Realize, yes, it's a little bit more expensive to own a home right now, but renting a home is still very, very expensive because you are getting none of the benefits of home ownership when you're renting. And literally every dollar that you are paying in rent is going off to paying off somebody's mortgage. So you really have to ask yourself, do you want to pay for your mortgage or do you want to pay for somebody else's? So guys, I hope that helped. I hope you found that valuable. If you have any remaining questions, if you have any comments, concerns, thoughts, fears, throw it in the comments. Thank you guys for tuning in. Absolutely look forward to seeing you next month.